Hello and welcome to Core Finance. I'm Matt Brown. I'm joined by Federico Bently, who is a sales trader at Ayondo. Thank you very much for coming in today,
Thank
Federico. So you brought along a few slides.
Yeah, we have about 7 slides today.
Fantastic. So kicking off, just talk us through what this is and what this means for potential traders and investors at Ayondo.
Okay, so usually with Ayondo, we have all these top traders, and a lot of the time, once we've been here, we've been showing sort of some DAX traders, maybe some index traders. Today, we're just going to highlight an equity trader. He's a German guy who's trading mostly German stocks. So it's equity-based, driven strategy, slightly more traditional in the way that he's more buy and hold. So he'll be trading, Adidas, Deutsche Bank, and so on. And you'll usually hold them for a few days, maybe a few weeks, as you do with these these equity strategies. But what's interesting is on the intraday, he'll be hedging himself on the DAX. So he'll be long on all of these particular stocks. And what he'll do is he'll short himself on the DAX. So if there's for example, today Deutsche Bank didn't quite reach its targets, so it's down a fair amount. And if these stocks do come down in price, at least he's hedged on that DAX. But that's more of a sort of an intraday trade. So it's just day trading for the DAX. Which I think is quite a clever idea, clever hedge. He's been trading with us for about just shy of 2 years, and you can see he's got a very low risk score of 1, which is the lowest you can have. Followers, not too many so far, but he's gathering, I guess, momentum.
Understood, and you see he's been tracking the DAX. Is that a slight underperformance though?
I guess it is slightly different. Obviously, if you held the DAX in the last 2 years, probably you would have been outperformed by the DAX, but what you're getting with him as well, I guess you're getting dividends as well on these stocks that he's holding. And it's a lot lower risk, obviously, the DAX. We saw last week that it did have a bit of a drop-off on Friday, so you don't get that volatility with him. His volatility is 1.71%, low drawdown, and he's only trading around 14 times a month, so it's nothing too hectic, which is good to see.
So not over-trading.
No, exactly, not over-leveraging himself, which is important.
Good. And just moving on to the next slide.
Exactly. So here you can see, just shy of 2 years performance, and you can see sort of the equities that he's trading. Obviously, mostly DAX there because it's the intraday hedge that he has. But he's trading Commerzbank, all the big banks in Germany, Adidas, some other stocks, and you can see his performance since he started trading in February. So it's fairly low risk, very sustainable. His worst month was last June, 3.79%. So nothing too major. But this year so far, he's had a pretty good record. He's kind of returning so far about 10% a year, which is, with low risk, is
very good.
Yeah, exactly. It's nothing too good.
Fantastic. And just moving on, looking at Tim trading.
Yeah, so I guess this is a sort of a fan favourite. Tim Young, he's obviously been on the show a few times. Again, he keeps on carrying on. He's probably been trading with us nearly 3 years, 2 years and a half, and he keeps on going. You can see that he's been outperforming the DAX with his performance, almost reaching 40%. Which is great to see. Again, risk score of 1, low volatility. Trading a little bit more than this D. Dattenbank guy. He's trading about 29 times a month. But low drawdown, and again, great performance and very sustainable. We haven't really seen any real drawdowns, but slightly different, I guess, strategy in the way he's just trading FTSE. He'll usually wait for the FTSE to retrace, go long, and he'll just take 10 points or so. So it's a fairly simplistic strategy, but obviously very effective. We have seen.
Fantastic, good stuff. And again, just looking at the breakdown of the performance, it is.
Yeah, exactly.
It's FTSE, but he knows how to trade it. I've known Tim for about 10 years, and he understands the FTSE and when and where to trade. So fantastic to see he's outperforming. And
he's more of a day trader, but sometimes he will hold positions. If he goes long on the DAX, long on the FTSE, and it comes off a little bit, he will hold that position sometimes. And this year so far, it's turned around every time. And again, you can see, 2.5 years of performance, fairly sustainable, almost 10% this year. So similar performance, I guess, to this other trader, slightly more diversified, I guess.
Good stuff. Looking at risk factor changes. So just explain to our viewers what this is and how traders at Ayondo can use this.
Yes, of course. So with Tim trading, for example, if he was the only trader in your portfolio, the default setting would be 1-to-1. Before, if you followed 3, then the default setting would be almost a third on each one, and you would actually have to increase this yourself to 3 times in order to emulate them. What's happened now is for all traders, even if you follow 1 or 5, which is the maximum, the default setting will be 1-to-1, so straight away you emulate them. So if you have 5 top traders in your portfolio, they all make 1%. Overall, you've now made 5%. Before, you'd only be making a fifth on each one, so overall only 1%, and therefore you can increase it. So I guess it's just simplified the whole risk factor. You know, a lot of clients were initially sort of wondering about the risk factor, how it worked. Very simple to explain, but now it's just simplified for everyone. And this is obviously in line with the sort of the Ayondo portfolio management license, which we've implemented. I guess it's there more for sort of robust, I guess, regulation and tightness for the clients. It's also decreased the risk factor overall. As you can see below, the maximum that you can actually increase a top trade now is 3 times. Before, if you were following Tim trading, 1-to-1, that's fine, but you could actually technically increase it to 10 times. Meaning if he lost you 10% in 1 month, you've lost 100%. Now, the maximum that you can actually follow someone is 3 times. So even if Tim Trading has made you 10% this year,
gotcha, the
maximum you've made is 30%. And on the flip side of the maximum, you lose
30% downside.
30%.
Yeah. Okay,
so
fantastic. And sliders as well. Everyone likes sliders.
Yeah, exactly.
It's kind of it's intuitive and there.
It is very intuitive, very simple, and very customizable. And of course, you can risk it all the way down to 0.25%. So if you're very risk averse, you can just put it down to 0.25%.
Super.
Yeah, so it's fairly simplistic.
That's good. And looking at another trader here, Edel Metal, is that how you pronounce it?
Yes, Edel Metal is, he's a German guy. I guess this is more about the new implementation we have. This guy, in a way, it's kind of a warning in the way that he has a lot of open positions. Currently, he's, last time I checked, about 103 open positions. What we'll be adding soon is that there'll be a limit for how many open positions you can have. Which will be down to 75, as you can see here. You can see last November, he had a drawdown about 20%. And when you have a lot of open positions on the DAX, you mainly trade the DAX, all it takes is a correction of 300 points or maybe 400 points, whatever it is, and that's going to really exacerbate those positions. This guy's got a lot of long positions on the DAX. And if it does turn around, which it might do, a lot of people are a little bit nervous about the markets. They've been almost trading sideways and slowly going up. If it does come off, then he's going to have another hit. He did have a bit of a drawdown, you can see on the chart, last week I think.
Yeah.
Lost about 15%. So it's more of a warning. I feel like he's got a lot of followers, and I just sort of want to highlight the risks that we have seen before, and I think that may happen again. And again, you can see that risk score of 7, fairly high in comparison to these other guys with a risk score of 1. But that's what you get, drawdown, almost reaching that 25% threshold. Once you go above the 25%, you'll be demoted to level 1.
Understood.
And he's at level 5, so the incentive for him also, does shrink.
Okay, and the risk score, does that run from 1 to 10, with 1 being low risk and
yeah, exactly, 10 being highest. And this can change. This can change over your, your portfolio and how often you've been trading. I guess it does look at sort of maximum leverage ratio, current leverage ratio, historic leverage ratio, your unrealized losses. In this case, this guy has running loss of around 15%. And it does look at your career level. So if all of these are fairly high, what's consistent about Tim trading is he's usually trading about £5 point, and it's not sort of 5, and then the next day it's 50. It's that consistency which will show it's emblematic to that risk score. This guy is puts a lot of open positions, which does I guess accumulate, and therefore high risk score.
Understood. And just before we go on to the winter bonus, so for our viewers who are not aware of Ayondo, there's 2 elements to it. You can be a trader yourself and be followed, and you can also follow traders.
Exactly. So technically you have 3 sides. You have just your normal self-directed trading account, your spread betting, CFD trading, which have a lot of benefits. The main benefits you have with Ayondo is the regulation. You've got the zero balance protection, so you can never lose more than your initial deposit. And should anything happen to Ayondo, you cover up to £1 million directly through Lloyd's of London, which we've taken out sort of an additional insurance policy. Usually, the FSCS only cover you up to £50,000, so it's a little bit more robust. But on the social side, yes, you've got the top traders who either get paid on a volume-based or performance-based, or you can just be a follower. And obviously, it's very customizable. As we mentioned, if you're following Tim Trading, and you're still fairly risk-averse, you can always set your own loss protection. So if you've got 100,000 in the account, and your maximum risk, is 10%. You simply set a loss protection at 90,000. So if your account value does diminish by 10%, £10,000, then you get sort of liquidated at that 90,000 mark, and you're not losing more than roughly 10%.
Super. And just finally, sorry, the winter bonus. Just talk us through this.
Yeah, sure. So last time I was here, we were talking about sort of a summer bonus. We don't offer these bonuses too often. So this is a winter bonus in the way it's sort of a way of accommodating your investment. So should you want to invest, let's just hypothetically say £100,000, we would additionally add a 25% bonus, which would £25,000. Obviously, it's not free money. You can't just take it out straight away. Once you've generated twice the amount of spread and bonus, that bonus is technically yours. So you receive a £25,000 bonus. Once you've generated £50,000 in spread, that bonus becomes yours. There's no time expiry.
Okay.
You take it at your own pace. And again, if you withdraw half of your investment, we withdraw half of your bonus. For example, on the social side, the spreads are slightly wider. So if you're following Tim trading, FTSE's got a 2-point spread. You trade that £10 a point. That's £20 spread, right? That's going to be accumulated over to the bonus. And you sort of take it at your own pace. Obviously, if you have more traders with slightly higher risk factor, you will trade it, I guess, clear it quicker. But the whole point isn't to trade that bonus as quickly as you can. It's more there to accommodate your bonus and or your account, really. And you take it at your own time. A lot of brokers do have sort of time expiries. They'll give you sort of a 90-day period to do it, which does rush your trading, and that isn't really a strategy.
Which can change your strategy.
Exactly. You might be putting on bigger sizes, taking on more risk, which is unnecessary. So it's I think it's around till mid-November. So it's something that could be potentially advantageous.
Fantastic. And our viewers can find out more on the website.
Exactly. You've got full terms and conditions on the website. It's just at the bottom of the page. It's just on offers. If not, you can call in and speak to one of us, and we'll go through it.
Brilliant. Well, winter is here. Certainly, or is coming. On that note, Federico, thank you very much for joining us today.
Thank you very much.